So have you ever wondered how to actually chart support and resistance and supply and demand? We had a member of the community that requested that I go over this, and so we're actually going to go over this on a requested ticker that I have not actually charted before, so we're going to be doing this together. Let's get right into this. First thing you want to look for is the all-time high, and you want to look for the all-time low. We're going to chart a trend line here, and when this is on the monthly time frame, I want this to be a thicker line, and I also usually make it a slightly different color than the rest of my support and resistance lines. I personally use a dotted line, but you can use whatever you want. I'm going to do a thickness of 3, and then we're going to come down to, and let's make sure that that was corrected, 39.4. Well, that needs to be corrected, 39.4. That's one mistake you don't want to make whenever you're charting this. And then we're going to do the same thing down here. We're looking for a 36 cents for the all-time low. 36 cents. Same thing for the all-time low. I like to make it a little bit different color than the standard orange that I use. We're going to make that pretty thick as well. And then what you're really looking for is visual touch points, areas where price came up and rejected, or if it came down and then it rejected and the buyers bought it back up. So this ticker doesn't look like it's been trading for too long, so I think we can zoom into the weekly time frame now. And we're going to look again for those touch points. So here, I'm going to draw that over, and you want it to touch as many points as possible to act as resistance in this case, or support if you were going for the other end. And so let's quickly edit this. Again, I use kind of like a light blue for my resistance, and we're going to set this to a width of 2 because this is on the weekly time frame. We're going to come down, and we can see that there's a bit of another area here. So we'll chart that level. And of course, you can always drag and drop these if they didn't exactly set the way that you wanted them to. So we'll just set the width correctly there. And then it looks like there's an obvious level here as well. So let's get that support level charted out. And I can see a bit of one here as well. So let's make sure that that's charted, because that's very important to have these in the correct spot, because you're actually going to be making money or losing money based on where you place these. One thing you want to pay attention to very closely too is how price reacted at certain levels, because this is on the weekly time frame. Normally I would set this as a width of 2, but look how price rejected so strongly off that level. So we actually want to set that a little bit higher, because if price comes back up there, you're going to expect it to likely reject off of that. And the same thing for who there was just so much selling pressure. We want to make sure that that is a thicker line so that we know visually when we get up to that, price is likely to reject off of it. And I don't chart them on the charts, but you've also got key psychological levels to pay attention to. So like the $1 level, 2, 3, 5, 10, on and on. If it makes it easier for you to see those levels visually, you can always chart them. This is totally up to you and however you prefer to set up your charts. Then once you've got all of your main support and resistance lines drawn on the weekly, you could zoom into the daily time frame if you really wanted to. I like the 4-hour because it includes intraday information. And so let's go over and see what's going on here. So I can already see, in addition to horizontal support and resistance lines, you can also have diagonal ones. So I can see if we tried to chart from here down, notice how it's not really touching any of these points. So we're going to stop that. But it does look like if I start from here and chart down here, that is getting a lot closer to these and it's touching more points. And the same thing for this. If I were to chart from here to here, it's not really touching anything. But if I start from here and chart up here, we've got at least 2 touch points and it is a little bit closer. And so you can always have diagonal support and resistance lines as well. I believe on TradingView you can actually do curved lines, and it actually looks like this might be perfect for this particular chart pattern, but I don't know that Thinkorswim has that. So let's just stick with the straight lines. And if you're getting value out of this video, please make sure to hit a little like button down there and leave a comment if I've left anything out that didn't really make sense. But while we're already here, let's go ahead and take a look at the measured move here of what would actually happen. So if you were charting on Thinkorswim, you would want to make sure that this is at a 90-degree angle so that it's straight up and down. And then we're going to drag it. We're going to take this over here to the apex where we would expect for it to break out. And then you can either duplicate or you can just do another measure move here, but I'm going to duplicate and drag it down and see where I've got my charts on log scale, as I go to drag this down, it is zooming way, way, way down. What that's indicating is that if this breaks to the downside, it's actually targeting something more like bankruptcy. Whereas to the upside, it's targeting around like 430, a share. And this is coming right up into this key resistance level. So it would make sense that you would get a rejection there. And something else that you want to pay attention to is called supply and demand zones. Rather than it being a key level, it's more of like an area of resistance or an area of support. And for these, I use a shaded box. But what we're looking for is areas where price came up and then it rejected. So maybe around here. I'm going to drag this down to right around there. So we know this is a supply zone. It's supplying the market with shares. So if price comes up into this area, we're going to expect it to reject down. And then the same thing can be said for demand zones. There's a lot of demand for shares down there. So if we draw this from essentially where this candle came down and then we got bought back up, we would very much expect if price came down to this demand zone that the shares would get bought up. So you're kind of stuck in between these two zones here. So if you haven't already, please make sure that you've subscribed and tapped that notification bell so you won't miss the next video that's coming out tonight on overall market analysis and whether the market could go up, down, or sideways from here.